Good afternoon. Welcome to another Foenix Partners Traders Update. Today, Wednesday, the 14th of December. We'd like to take a few minutes to look back at the stories from the last few days and also kind of the main events from this week. It's a big week with a particular focus on central banks. You know, we've moved out of a phase that's been very much driven by political events. We've had the US elections in Austria, the Italian referendum that's had a lot of coverage, and now really we're into sort of a period where we're focusing entirely on central banks. So ECB last week, some surprises there. The market certainly was blindsided by Draghi's announcement with regards to what the ECB were doing around QE, the extension to the end of the year, but reducing it from 80 to 60. Initially huge gains for the euro, and then those unwound completely and resulted in losses that allowed sterling to get up above 120 again. Now we're focused on the Fed tonight and the Bank of England tomorrow. So starting with the Fed, 2015 was a year of will they, won't they with regards to the Fed, and it ended with an interest rate hike in December. We've been in this position all throughout the year, and now we're going to get another December rate hike. The market is so convinced that there's almost 100% chance of that being priced in. So coming into this year, the Fed actually forecast 4 interest rate hikes. We entered a period of uncertainty with global markets, equity markets, certainly in turmoil, concerns about Chinese growth. We then had the referendum in the UK and the surprise outcome there, and then obviously US elections. So there've been plenty of sort of headwinds when actually the underlying US economy has been performing very, very well. You know, GDP up above 3%, expectations that will move up above 4% next year, creating 188,000 jobs on average throughout each month throughout 2016, unemployment down to 4.6%. Things are looking very good, and that in addition to the expectation that Trump will come in and deliver significant fiscal stimulus, in the market's opinion, that forces the hand of Janet Yellen and the FOMC tonight to hike interest rates. So what will the market do? It becomes more difficult to predict when it's expected to this extent. We are seeing the dollar subside a little bit from the peaks, but there's a strong chance that the dot forecast will be upgraded. Right now they point to 2 interest rate hikes next year. If they're upgraded to suggest 3 or maybe even 4, then almost certainly you would see a big dollar rally. You'd see the dollar index rising from 101 maybe to 102, 103 towards recent 13-year highs. You would almost certainly see euro dollar come off, and sterling US dollar would probably lose its 127 handle, might even head down towards 125 and retest those recent support levels. That aside, we've got the Bank of England tomorrow. Difficult to call, obviously no expectations in terms of any policy changes. It all comes down to the tone of Mark Carney's statement. Everything has to be caveated with the outcome of the Supreme Court ruling and obviously what may or may not happen in March next year with regards to Article 50. So difficult to make any kind of bold calls there. The pound has tended to respond fairly well to Carney in recent months, and so I think we have every right to expect the same again. But I have to say it's likely to be dwarfed by the markets busy digesting the tone of Janet Yellen's statement tonight. So that's all from us. Thanks very much for joining, and speak soon.